you've received this notice, you could wake up with an empty bank account tomorrow. The notice of levy comes in several forms, but all mean basically the same thing. The IRS is about to take your property, normally money, wages, or amounts owed to you. This is your last chance to do something before the IRS takes your property to pay off your tax debt. Let's take a look at what this notice means and what you can do about it. What is a levy? A tax levy is, at its most basic, the government seizing your property to pay a debt. Another common term in the arena of wages is a garnishment. At this point, the IRS has issued multiple reminders, including notices and letters, that it is about to seize your assets. And, so far, it has not received a response, either in the form of payment, installment agreement, or even just communicating with them. The IRS will issue the notice of levy to the entity that holds your assets. This could be a bank, or your employer, or another vendor that's working with your business and owes you money. If you've been watching my series on IRS notices, you know that this is not the first notice the IRS sends out. In fact, by now, you should have received at least 3 other notices before the IRS takes action. That includes a notice of balance owed, notice of an intent to levy, final notice of intent to levy, and now they are actually levying your property. What can you do? Well, you have 21 days to act before the property is actually seized. That does not mean that you get to go out and spend the money before the IRS can take it. If the notice was sent to a bank, the bank has to freeze those funds for the next 21 days. This provides you an opportunity to negotiate with the IRS and come to some sort of an agreement. This could mean that you pay the entire amount. It could mean entering into an installment agreement, submitting an offer in compromise, or getting into currently not collectible status. However, if you do nothing during those 21 days, then your bank or employer or vendor will send the funds to the IRS, and they have to do this by law. What about if you enter into an installment agreement after the funds have been sent? Can you get that money back? Unfortunately, no. Once the IRS seizes the money from your bank account, or garnishes your wages, and you later enter into an installment agreement, the IRS will not refund that money it took from you. Those funds will have been applied against the total liability, reducing the amount you owed, which is of small consolation to most people. If you want to prevent this from happening, you must get ahead of the IRS. Don't wait until the IRS issues a notice of levy to start responding. Once the notice of levy goes out, your options are very limited. Make sure that you respond to the first notice that you receive, whether it's the reminder of a balance due, or the notice of intent to levy, or the final notice of intent to levy. Make sure that you respond and hopefully have somebody helping you throughout this process. I discuss other IRS notices, including many that you may have already received in other videos in this series. Links are in the description below. Have a good day.